Hello everybody, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, April 22nd. Well, the market had little net loss or little net movement today. If we look at the two lines that are important to us with the Ichimoku charts, we have the Tenkan-sen, the green line, and the Kijun-sen, the pink line. The Tenkan-sen is above the Kijun-sen, which means that the market is essentially bullish, and the market is trading above the cloud or the Kumo. That's this region here. The Kumo has twisted some time ago and has a bullish bent to it. If we look at the angle of our Tenkan-sen, it is still pointing up, which means that the market still has some upside momentum. And as we've seen previously, in a fast-moving market, the Tenkan-sen acts as an area of support and resistance, and here it's acting as a rough area of support. It's acted as support on this occasion, and roughly on this occasion, and this area here is fairly similar to this previous area. Just looking at the candles, the market was trending down in a first time frame downtrend, and yesterday we had a decent size green candle, but the trend was still down. We had a lower high and a lower low. Today's price action confirmed a new first time frame uptrend. The candle today has a higher high and a higher low, which means that it's essentially bullish. The only thing that worries me a bit about today's price action is that the size of the body is reduced significantly. Now that probably has implications for the downswing that the market was in, and unfortunately it's a red candle, but it's not too bad that it's just a fairly small body candle. Now, one thing of concern is the large shadow or wick on top of the candle, and that represents price rejection. That's downside price rejection. So even though we have a new first time frame uptrend, this market has tried to rally and it's been sold off. And I think that's an area of concern. The good thing is that the market is still hanging around the Tenkan-sen, and it's trying to hold as some sort of a support area. The current candle is potentially a Japanese candlestick reversal pattern, and that pattern is a harami, and that's where the body of the current candle is engulfed by the previous, or the body of the candle is within the body of the previous candle. And we need confirmation of this. I'd like to see the high of today's price action taken out for this market to continue on its way. But as we saw previously, this area through here where the previous swing high was is roughly within this zone of this previous price action, and it's a decent area of resistance, and it's little wonder that the market sold off when it approached there over the last few days, and we're getting some fairly indecisive trading here at the moment. So if we do rally, we'll probably see this area hold. If the market does sell off, I'd be watching the low of today's trading, and then the swing low just down around this level, and if it trades down through there, we have some sort of support at a previous swing low here with a coincidental area of support at the Kijun-sen. Now the Kijun-sen is also pointing sideways. When the Kijun-sen is pointing sideways as such, it means that the market is congesting, or it's retracing a previous fairly strong swing. So that's what it's doing at the moment. We have a fair bit of congestion here. So neither too bullish nor too bearish at the moment, and I think we just need to see how the market reacts to the highs and the lows of the current candle.